Welcome to another episode of the Michael Yardney podcast, where twice a week I like to delve into the latest trends and insights about our property markets. We also talk about wealth creation and investment strategies, of course. But today I'm joined by Dr. Nicola Powell, Chief of Research and Economics at Domain, and I want to discuss Domain's latest profit and loss reports because it offers a detailed look at the current state of our property markets across the country. We're going to explore the key findings from the report, dive into regional disparities, and discuss the impact of the economic factors like interest rates and inflation and how they've affected profitability in property. So whether you're a seasoned investor just starting out, whether you want to see how your house value is going to go up, we're going to talk a bit about what's happening in the future too. This conversation, I think, is going to be packed with insights that will help you understand what's happening and make more informed decisions in our constantly evolving markets. So let's get started.
Welcome to the Michael Yardney podcast, where twice each week you will learn a number of new ideas regarding success, property investment and money in around 30 minutes. Our show is brought to you by Metropole, who specialise in helping you grow, protect and pass on your wealth through strategic property and wealth advice. Now here's your host, Michael Yardney, Australia's authority in wealth creation through property, who has been voted one of Australia's top 50 most influential thought leaders.
As the property market reaches new heights recently, more homeowners than ever are reaping substantial profits when selling their properties. Now, I don't know why they are selling their properties. Maybe that's what you can talk about because we do know people move house occasionally, and the new Domain profit and loss report that was recently released revealed that the proportion of profit-making resales have reached multi-year highs. Interestingly, Brisbane leads the charge with 99.5% of houses selling at a profit. Nationally, the median profit when people sold houses was shown by Domain to be $326,000 for houses, much less for units, $171,000. But still, these were 16 and 13 years highs. So to discuss the findings of this report and what they mean to you, I'm pleased to once again be joined by Domain's Chief of Research and Economics, Dr. Nicola Powell. Hi, Nicola.
Hi, Michael.
Now, I was interested to get Domain's annual report, but if for those who haven't had a chance to read it yet, can you maybe give us a brief overview of why Domain does this report and the key findings this time round?
I think report is really important to give that holistic view of property. We know property is always been long considered as a way to build financial wealth and security. And what this report looks at is we look at each financial year and we look at what were the proportion of resales that have occurred over that financial year, what incurred a profit, what was at a loss, and what was that dollar figure. So it really gives an idea of, it helps us also to understand why Australians think property is a way to build financial wealth and security, because as you mentioned in your introduction there, the vast majority of properties being resold do incur a profit. And I think, one of the things that this report really highlights is, it's all about how long you stay in that property for. Tenure is really important. And I think, when you look at loss-making sales, they are such a small pool of overall property resales. And those that are incurring a loss tend to be associated with resource locations, or they're associated with areas that have higher levels of particularly high density apartments.
That makes sense. But I was interested to see it wasn't just the baby boomers who you would have been in their properties longer that made profits. Was it in your report?
So this was a bit of myth-busting, I think, because I think we've always assumed that it's baby boomers that are reaping the benefits in terms of profits. But I think what this report really highlighted is those suburbs that were incurring the greatest percentage uplift in terms of profit-making sales were those suburbs that were really dominated by Generation X and kind of older millennials. And we saw that these types of suburbs led profit-making resales. But interestingly, even though we saw a certain demographic really leading the way in terms of those profit-making resales, it was across a broad spectrum of income, both kind of higher incomes, but also those lower incomes as well.
Well, I'm sorry to interrupt you, Nicola, but for some people, their properties made more profits than their wages.
Absolutely. There were many suburbs, Michael. You're talking eye-watering dollar returns. The greatest dollar returns at a capital city level were led by houses, and they were led understandably by a higher priced market. So Sydney, for example, houses being resold over the past financial year had a median profit of $655,000. So, that is well above an income
Yes.
level. $435,000 in Canberra, and just under $400,000 for Melbourne. So these are big, big dollar returns.
Now, some people are going to say ugly, greedy investors, but in fact, the vast majority of these people were homeowners, weren't they? And interestingly, they don't pay capital gains tax. So when people talk about investors getting a capital gains tax discount and the government should take it away from them because it's making it hard for first home buyers, interestingly, all those people who sold their properties at a profit, they didn't get taxed.
In terms of those suburbs leading those profit margins, it wasn't those investor suburbs. As you rightly say, it was really led by owner-occupied areas. And it was diverse. When you look across our different capital cities, so for example, Sydney, some of the suburbs that were leading in terms of those profit margins, Galston, Wakeley, Neutral Bay as well, so really inner prime lifestyle locations. And some of those areas in Melbourne, so it was Summers, it was Cannons Creek, it was Wonga Park. In Brisbane, it was Pullen Vale, Sadler's Crossing. And in Adelaide was interesting. It was some of these kind of really kind of heritage, family-led locations that have larger blocks. So it was Colonel Light Gardens, Westbourne Park and Kensington Gardens.
Now, people are going to be listening to this while they're cycling, while they're running, while they're exercising or doing other things, and they're going to probably want to see some of these details. So I'm going to leave a link in the show notes to Domain's profit and loss report so people can dig into those suburbs themselves, because you've given a lot of detail in your report, Nicola.
We have indeed. It's a really interesting report to actually see, well, what's the historical change? Like how is the market performing compared to last year? And when you look at the percentage of profit-making resales across Australia, it's actually up. It's up over the last year and it's up over the last 5 years, which is, you and I understand this, Michael. It's understandable because there's two things happening. We've got record pricing across many areas and prices are rising, but also we are staying in our homes for longer. And that is something that historically has been lengthening over time, that we are staying put in our current homes for a longer period of time. And as we know, the longer a period of time that you stay in a home, the greater those profit margins can be. But there were some cities, and I don't think this is going to surprise you, Michael, when I reveal some of those cities that saw a reduction in the proportion of profit-making resales. So it was Melbourne that was down over the last year and the past 5 years, Canberra, Hobart and Darwin. And we know that Canberra, Hobart and Darwin have been those three property markets. The smaller capital cities have struggled a little bit. And also Melbourne. Melbourne's pretty much done not a lot over the last 18 months. So it's understandable why we're seeing a slight increase in loss-making resales.
Well, this year has been an interesting year in our housing markets because while the markets are always fragmented, Nicola, they've been probably even more so than ever. There seems to be three tiers. The front runners, Perth and Brisbane and Adelaide. And then there's Sydney, which has still done pretty well. And then Melbourne, Hobart, Canberra and Darwin have very much underperformed. It is the cycle. We've been there before. We've seen it before. It seems a bit more pronounced. And it's probably surprising to some new people who are following our property markets because they've come out of that once-in-a-generation boom a couple of years ago with those so low interest rates that every property in Australia, main roads, secondary locations, big intersections, everything went up in value, didn't it? But that's not normal for the markets.
It isn't. And, to have a multi-speed market across our capital cities, that's normally what we tend to see. And I think what it really places the importance on is making sure you're making the right purchase based on strong fundamentals of why, whether it's an investment property or whether it's your, primary place of residence. And you mentioned there, Melbourne, I think, has been a really interesting city where it's very unusual for Melbourne to really stagnate in terms of price. You tend to find either great rates of price growth or property prices overall are falling. It's a major capital city. And I think what Melbourne is really setting the foundations for is eventually it will overperform relative to our other capital cities. And I think that value has been building over time. And, we were looking at keyword searches to see what buyers were looking for as spring is.
That's an interesting thing. So with Domain, you can see the not just the suburbs, but what people are looking for. So what did you find when you dug into that?
It was really interesting. So, if a buyer is starting their search using what we call the keywords, that means they're going onto Domain and they're tapping in, pool, or they're tapping in warehouse as a key priority for their home. We track that, and we track the changes which are more important. Melbourne was one of those cities when we looked at the keywords, it really did stand out in terms of what is changing in terms of what buyers want this spring. And what was interesting, it was Art Deco. It was warehouse, it was heritage, and even Tudor was in there. And I think this really showcases that we've got to remember that value in Melbourne has been building up over time. And if you're starting your property search with those types of keywords, you're probably not an investor. You're probably not a first home buyer. You're an established buyer. You're on your third or fourth home. And I think what people are using, it's people who are in the suburbs, they're local to Melbourne. They are realizing that now is probably a good opportunity to purchase before prices rise. We've got to remember prices overall are still below their price peak. And so they're using this opportunity to see if they can purchase in their dream suburb.
Definitely. And for those who are newish to the market, I guess one of the thoughts is that you're buying properties at the moment in Melbourne below replacement cost. We've spoken about that before, when the next round of apartments and townhouses and even houses are going to be built, and they will be. The government's motivating for that. They're going to come on at a much higher price. At the moment, it's just not viable to do because the gap between established properties and new properties is too big. But that'll close. I don't remember it being like this since the early 90s, Nicola, when there used to be a joke, last person leaving Victoria, please turn the lights out. But then there was a change of government, there was a change of sentiment. When that happened, the property market caught up and then continued its mean of just outperforming the other states. And I think I agree with you, that's likely to happen. But I don't see that happening until confidence returns. And one of the things that's going to cause confidence to return in my mind is going to be when interest rates start falling. And that keeps getting pushed further and further out, doesn't it?
It does. And sentiment is a really important driver and an important one to actually watch, because logically, if Australia feels more positive around the economic outlook of their own personal financial circumstances, but also the broader economy, they're much more likely to make a big ticket purchase, such as buying or selling a property. And you tend to find when consumer confidence or consumer sentiment is rising and it is positive, it does influence greater levels of housing turnover. So more property transactions do occur. And I think what's been interesting is we have seen Australia in deeply negative consumer sentiment for, roughly 2 years now. But we've got most of our capital cities have been rising in price and we've got record pricing, but Melbourne hasn't done that. And I absolutely agree with you. I don't think that we've seen a bit of a stabilization in sentiment over the recent months. And I think the narrative is changing that while the cuts to cash rate are unlikely to occur until the early part of next year, I think when that does happen, it will make Australians feel more positive about their overall financial circumstances. That will lift sentiment, and I'm certain that will be amplified through our housing markets in terms of it will bring people to the property market to make those property transactions. And then what we're likely to see is further momentum and price growth, particularly in a market like Melbourne that has underperformed really for the past 4 years.
Well, your experience, my experience shows that when sentiment turns, it turns very quickly. We just got to remember what happened after COVID when people suddenly realised life was going to get on. Buyer sentiment turns before seller sentiment. So all of a sudden, more buyers come into the market. Sellers haven't decided yet, should they put their house on, shouldn't they? And all of a sudden, the supply-demand equation changes and property prices jump up pretty quickly. So it'll be interesting to see. I think the other interesting thing to remember is if you look back at how the Reserve Bank has in the past worked on lowering interest rates, they don't just do one interest rate drop. There is usually three over a period of, the meetings aren't every month now, but over a couple of meetings. So that's going to then create that herd mentality where people are going to not want to miss out. So I know smart investors and definitely a lot of home buyers are still out there. I mean, there is still depth in the Melbourne market. It's just not auction clearance rates that you report in Domain every Saturday and Sunday are still reasonable, but prices aren't going up. Now, I interrupted your train of thought because you were starting to tell us what people were looking for in Melbourne when they did property searches. Was it different in other states, Nicola?
It was different, and I think it's so interesting when you see the differences in what people are searching in other capital cities relative to, Sydney and Melbourne. Sydney, it seems to be always driven by those lifestyle aspects. So view is the number one, pool is at number two. But what we've definitely seen in terms of the changes is the word study has fallen down the ranks, and that's pretty much the case across all of our capital cities. That's understandable. I mean, it's still pretty much in the top 10 across many of our capital cities, but it has fallen. And I think that's probably reflecting the, going back to the office. And we saw it rise through the ranks during the pandemic because of the working from home movement. But in Sydney, I think the key changes have been an increase in things that are associated with affordability. So, for example, so a dual occupancy, but also the word granny flat. And this has been something, across a few of our capital cities, is this increase in people searching for a home that has a granny flat.
Doesn't surprise me that doesn't happen in Melbourne. Different local regulations mean that there are not many properties with granny flats in Victoria, while I know they are more interstate. So what do you think the reason is there? Teenage kids, or people are looking for maybe a little bit of extra income?
I think probably a little bit of both. And it's interesting you say that, because the word granny flat is not even in the top 10 for Melbourne, but it is in the top 10 for Brisbane. It is in the top 10 for Sydney also, and it hits that national top 10. So really interesting nuance and difference between the different capital cities. But I think that rise of granny flat really showcases, I think, affordability and probably the cost of living crisis that we're all experiencing. I think it probably showcases intergenerational living and the rise of that occurring, particularly with adult children staying at home for longer, perhaps living in at home with their parents well into their 20s. Or the flip reverse, we're starting to, care for our older parents. But then I also think, well, is it the ability to have perhaps a secondary income, being able to rent out a granny flat, having that income, or perhaps it's a home-based business? So I do think both of those things are probably the driving factor. And I think it's much more evident in a higher price market like Sydney. We've got to remember Sydney's median house price is sitting at just over 1.6 million.
Wow.
So it is extraordinarily challenging. But Michael, some of the other not funny keywords, but interesting is probably the better way to describe it. So when you look at the keywords in Perth, I always find this interesting. Workshop comes in at number 4, workshop at number 4, and shed at number 5 in terms of the top keywords of what buyers are hunting for in Perth. And that is normally the case. They're normally up there in the top 10, but I always think no other capital city normally showcases shed or workshop in the top 10.
So are you able to tell the demographics? Because in my mind, that would be much more likely to be the younger generation as opposed to older ones.
Well, probably so. Or a shed. I think older generations love a shed to tinker around in. So, but yeah, I do think it probably, maybe it's that work from home space, but it really does come out in terms of those keywords. It's very different to the other cities.
Fascinating. I also saw that Domain reported that when people are looking for homes in their searches, a lot of it had to do with choosing locations related to their social life. Maybe it's because spring is coming on now, but location was very important. I saw that baby boomers, for 27% of them ranked it being very important, being close to family. And I can understand that. They want to be close to the children and grandchildren. And in fact, even the older generation, it was even more important. But I found it funny that only 8% of those surveyed said they'd be willing to compromise on proximity to pubs and cafes. So showing the draw to social spaces still remains strong. I'm not sure if that's a leftover from COVID or just the way we live nowadays.
Look, and I love these surveys where we're really trying to understand, that sentiment and what people are after. And I think for me, one of my biggest takeaways from this consumer survey that we conducted was location is everything. We asked about kind of trade-offs and trade-ups, and, people would always want to go to a better suburb. 35% of the trade up was a better suburb or a freestanding house or a bigger home. But in terms of some of those trade-offs, I thought it was really interesting is that Australians would much rather buy the worst house but be in the best street, or buy a smaller home in the suburb
Location.
that they want to be in. So it's
Yeah.
all about location. And as you and I rightly know, I think location is so fundamental on the buying journey, because it might be because it's close to your work, or it might be because it's tied to family, which is also important when people are on their buying journey. But I also think other things drive that, like school catchment zones. If there is a great performing school, we know that we're on a school journey for many, many years. Being in that suburb to get into that public school is really important. And we see that coming out not only in things like price growth and demand for areas, but also it was interesting, it came out across this consumer survey.
One of the other interesting things I read from the Domain report, and it makes sense, is the younger generations focused more priority on the amount of accommodation on bedrooms. I guess when millennials are moving out of their apartments, they're now going to buy a home, and they know it's not their forever home, but they're probably thinking, okay, well, I'm about to have a baby, but maybe we're going to have two. So they're wanting more bedrooms. I guess Australia's building bigger homes than almost everywhere else in the world too. Part of the reason our homes cost so much, Nicola.
It is, and I think we have to remember that we are quite spoiled in that sense, because we do live in some of the least dense cities in the world, and we do have large homes. I always get surprised when I go back. I'm originally from the UK. When I go back to England, and I get reminded of actually how small homes in England are relative to what they are in Australia. And I'm talking, standard sized homes. And it was interesting, the top 3 property features for buyers that came out of this survey were, as you rightly said, the number of bedrooms is number 1, the suburb location is number 2, and then the size of the home and the block is also important. So, really interesting finds in terms of what people prioritise and what they're willing to trade off to get into an area that they want to reside in.
One of the arguments we keep hearing thrown around are baby boomers had it easier in the old days. It was easier and cheaper. But I also know that the sort of accommodation I expected when I first started off wasn't what I know my children are expecting, and I see younger generations expecting too. When I grew up, a lot of people shared a bedroom. Often the bathroom, the toilet was outside. There was also an incinerator and a Hills hoist in the backyard, and there was more backyard in those days. And there was a lounge room. You didn't have a media room. You ate in the kitchen. Nowadays, people are wanting a bedroom, a couple of en suites, at least 2 bathrooms, probably a double garage, and maybe you can put your gym inside there. And I'm not saying that's wrong, but I guess the expectation of what beginning in home buyers are expecting is probably a bit different. And it's great that they can expect that. And so when you say, well, on a median income, you can't buy a median price house in our capital cities, well, maybe you shouldn't expect to start with I'm going to annoy somebody. Maybe you shouldn't expect to start with a median price house as your first home as a first home buyer.
And I do think that we are seeing the Australian dream of owning a home is being reshaped. And what I mean by that is, I think what we typically used to view as that kind of quarter acre block as that, first home is much more likely to be an apartment today, or a terraced or a townhome. I mean, we know we have a lack of medium density housing in our major capital cities, and that can be a great driver of supply and also affordability. But I even think it's interesting because, we were talking earlier kind of about construction and construction costs and new versus established. But I do think that the higher construction cost is also reshaping people's ability or decision making in terms of putting that extra ensuite on, because it's just become too costly to be able to do that. So it is going to be interesting to see, I think, whether those trends kind of stand true. But I do think we are reshaping that Australian dream, because affordability is definitely at the forefront. And I think even things like prefabricated houses, there's suburbs in the UK that have prefabricated suburbs. All of the homes are prefabricated, and that's great for affordability because they're much cheaper to build. And I really hope that Australia does adopt some of these kind of, other concepts that have been adopted in other countries that have been successful.
That makes a lot of sense. There's a lot less waste in materials. You can do it faster and quicker. Interestingly, we both recognise that the cost of new dwellings is very much driven by not just construction costs, but also by taxes, various taxes, the infrastructure taxes, and it's often said it's up to 30-40% of the cost of a new dwelling. So if the government's genuinely interested in making houses more affordable and helping more first home buyers into the market, they're not going to get anywhere by dropping the price of established properties. Any government that encourages that's going to get kicked out. But there could be ways of them making it easier for first home buyers to get in by some of those innovations that you talked about, by encouraging more efficient ways of building and quicker ways of doing things, and cheaper by getting rid of some of the taxes.
I completely agree. And I even think, when you think of a prefabricated house, the quality is quite high because you've got to remember it's being created in a warehouse, so in an environment that's consistent, and you don't get that in a traditional build. You're out in all types of weathers. So, I do think it is about thinking through how can we deliver a home at a much more affordable price. We know that the land component is a massive part of that. And you're right, you've got to remember the main voter vote, the major parcel of Australians own property, and nobody wants to see their primary residence going down in terms of value. And this is the challenge. And I think it's by creating diversity and it's creating innovative ways to deliver housing supply. And when you think about land, we know those inner city locations are always going to be at a price premium. And I think naturally over time we have seen the parcels of land sizes, even in our sprawling suburbs, and Melbourne is a very good example of this, the size of those blocks has shrunk over time. And, it's very rare to find a quarter acre block in one of these newer suburbs.
It's interesting that they build townhouses in those outer suburbs at the urban fringes so that they can fit them on smaller blocks of land nowadays, don't they?
They do, and I think it's a town. I'm a real big fan of townhomes.
Yes.
And terraced houses. I think, they are that missing middle, that stepping stone. And I think one of the things I'd like to see in our housing market is more stepping stones on the property ladder in terms of the diversity of housing stock. And terrace and townhomes provide that. You've got a bit of a back garden. It's efficiently using land. We know land is finite. It is that missing middle. And I think we've got to remember many of our capital cities have got a record price gap between houses and units. And a house is double the price of a unit in Sydney. To narrow that gap, what we need to create is different ladders so people can transverse through owning property. I always think through, if a first home buyer bought a unit, it's almost like starting again if they want to leapfrog then to a house. That's really challenging with this widening price gap between property types.
I think the townhouses are going to be the preferred style of accommodation for a wider group of Australians moving forward. They don't need a big backyard. They're trading backyards for courtyards and location. And they take the kids to the parks. The parks today are so much better. I know that because I go regularly with my grandkids there, and boy, the facilities that they've got compared to that hot stainless steel or metal slide that was about the only thing that was in the park when I was young. And in summer, you'd burn yourself as you slid down it. Now they've got all those great climbing things and things that twist and turn. People are living differently, and I guess that's part of the reason location is important. You want the right locations with the right amenities for your current lifestyle.
I think it really does place importance on the community that's around you. What are those facilities? What is the green space? What are those parks? And I think, they are must-haves for many Australians. And as you rightly say, I do think a terraced home is open to quite a wide pool of buyers. I mean, we're an ageing population also, and we've got to think through the big cohort of people that perhaps will be looking to downsize, and they may be wanting to downsize and are likely to want to stay in the inner or middle city suburbs. And so to create the right type of housing stock, we do need to see that urban infill occur in some of these prime locations.
Now, I'm going to leave a link to the Domain Profit and Loss report in the show notes, as I said, and we're going to catch up again regularly. But in 12 months' time, we're probably going to be sitting down talking about the 2025 Profit and Loss report. What do you think we're going to be talking about then?
Oh, that's the big question, isn't it? Look, I think that we're always going to see the largest portion of resales are going to be at a profit. I think likely we're going to see it increase in line with prices. We're still expecting prices to continue to rise across Australia, just at slower rates than what we had been recording. I think what we're likely to see is profit-making resales are going to increase, but the dollar profit margin might be slightly lower compared to what we have seen in these boom time scenarios, what we've seen over the last couple of years.
Well, it's interesting that the property pessimists, the property bears have gone back into their caves and hibernated. You're not hearing people talk about a property crash. You're not hearing people talk about recession. It seems that the Reserve Bank has managed to slow inflation, not as quickly as it would like, without unemployment going too high, without a recession happening. And as interest rates fall, as affordability increases because wages are slowly going up, there's no suggestion that property values are not going to keep increasing. But I guess our markets are going to remain fragmented based on local factors, aren't they?
They will. And I think, the profit and loss report is also a real reminder that property, in my view, is a longer term game. And you need to have that longer lens and buy a property with the right fundamentals in that right location. We've got to remind ourselves that property prices go through a price cycle, and it's very normal to see a bit of a pullback in price. But one of the fundamental things that we know from the housing market is when prices do rise, that duration of the upswing is normally longer and steeper than the downturn that unravels. And that really came out in the profit and loss report, with the vast majority of homeowners walking away with quite a tidy profit.
Well, each property rising cycle, whether it's a boom or just a big growth, sets itself up for the next stage where the market stagnates and property values drop. And anyone who tells you property values will keep going up all the time, be very careful listening to them. But as you correctly say, each downturn sets itself up for the next upturn. And there's been very few occasions where the downturn's been significant enough to be what we'd call a slump, where it's lower than the previous upturn. And that's shown even during COVID and during the rising interest rates of 2022. So those people, those property bears who say we're going to have a market crash, I can't see that happening with the very strong immigration and the fact that there's no way we're going to catch up with enough building in the foreseeable future.
Oh, look, and I agree with that. I think, we're expecting prices to rise. I do think there is a little bit in terms of price growth is starting to slow down in terms of prices are still rising, just not as fast. And that's been one of the really interesting dynamics of the current market. Is one of the things that's helping to take a little bit of momentum out is an increase in overall supply. We have to remember, though, there is still a structural undersupply of homes across Australia. But what we're talking about is what is the current choice on the housing market now. And what we saw across many of our capital cities, an increase in new listings, which was unseasonable over winter and autumn as well, so those cooler months. And I actually think that what that's created is the foundations for quite a good spring for buyers. I do think that we're going to be seeing the best spring that we've seen in a number of years in terms of choice for buyers, because we have seen that confidence increase from sellers. It's creating a bit more choice. We're seeing overall supply rise. And I think, in our major capital cities at least, it is going to, what that's created is much more choice this spring versus the previous few years.
What about the rental market, though? Rentals seem to have slowed. Rental growth has seemed to have slowed. I shouldn't say rentals have slowed, because they're still quite strong. And vacancy rates have crept up a tiny bit, but they're still hovering around 1%, which is well below the equilibrium where there's enough supply to meet demand. How do you see rents moving over the next little while? I know in due course you're going to bring out your domain rental report, and I'm sure we're going to chat about it, but maybe you can give us your thoughts.
So we are seeing vacancy rates rise. They're still very much in the landlord's market, as you just mentioned. And again, it's a bit multi-speed depending upon the city. We've still got extraordinarily tight rental markets in Perth and Adelaide in particular. But when we look at overall vacancy rates, they are rising. And what that is doing is slowing down rental price gains. So house rental growth is about 1.5 times slower. And we've seen about growth for units, rental growth for units is roughly halved. So they're still rising. They're just not rising as fast. And I think what we're starting to see is a bit of a rebalance. It's going to take some time until we hit that market equilibrium, as you just described. But I do think particularly so in the rental market, wages growth hasn't been able to keep pace with rental growth for some period of time. And I think what you start to see in the rental market is shifts. People consolidate houses. So it means they either move back in with family or they get a housemate. Or for those that are in the financial position, they fast track their purchase. So they go for something more affordable. They go to their, a suburb that perhaps they had previously written off just to gain access to the housing market. And I think that's some of the reasons. And obviously, when you look at overseas migration, we're now coming off of that peak. Population growth overall is coming off of its peak. And all of those factors together, I think, are helping to slow down the pace of rental growth.
Now, I know there's people who own properties in regional markets, and we have omitted to discuss those, not on purpose. We just got sidetracked of talking about the sort of things in property we love. So just to finish off, how did your profit and loss report show markets performing in regional Australia? And that's really lumping a whole lot of different locations together, because there are some very large regional markets and clearly some small ones.
It's been really interesting in terms of regional Australia in our profit and loss report. Regional Australia is actually leading the way. So we saw 96.1% of houses being resold for a profit. And that was slightly higher than compared to across the combined capital cities. It became even more transparent when we looked at units. So units in regional Australia, about 95% of them incurred a profit. Comparing that to our combined capitals, that was 89%. So the chance of having a loss-making resale in regional Australia is lower compared to our combined capitals, which I think is quite a statement.
Isn't it? Yes.
It is certainly. And even when you look at the dollar figure, so when you look at the gain, in regional Australia, it was $245,000 for a house and $196,000 for a unit. So you tend to find that profit margins for houses were higher in the combined capitals, but actually for units, the dollar gain was higher in the combined regionals.
Well, Nicola, thank you very much. I always enjoy chatting with you. You've got such great insights, but with Domain, you've got access to so much data. So you're more than just a property portal. I'll leave a link to the report in the show notes, and I look forward to catching up with you again real soon to discuss some more property matters.
Thanks so much, Michael.
I always enjoy my chats with Dr. Nicola Powell, and I'll leave a link to the Domain reports in the show notes. But if you don't currently subscribe to this show or follow it, and you'd like to get information like this twice a week, please just stop before we get on to the next segments of the show and subscribe on whatever podcast app you're following this on, or if you're listening to it on YouTube, do that there as well. And you could always leave a review. But before I share my mindset message with you, I hope the message that you got from my chat with Dr. Nicola Powell was that you shouldn't be worried about what's ahead. In fact, I'm hearing currently investors worrying they're exiting the market. Maybe they bought the wrong property in the first place, and some have got financial issues because they've overcommitted. But in general, others are just worried, is it the wrong time? Maybe the government's interfering too much, as we just discussed a moment ago. Maybe interest rates are going to remain higher for longer. The banks are giving them trouble. I'm seeing some leaving the market, but I'm seeing lots of potential investors and home buyers sitting on the sidelines. They're waiting for all the signs to improve before they make their move into property. I hope the discussion that we just had shows you that you should be taking a long-term view and taking advantage of the window of opportunity the market's currently offering you. That's what strategic investors are doing. They're not worried where interest rates are going to be or the economy is going to be in 6 months' time. They're making their plans based on where our housing markets are going to be in 5 or 10 years' time. They see that currently, while others are worrying, this is a good time to get in where there's less competition. They recognise the market's reset early in 2023, and there's still a lot of life left in this particular cycle. So if you want to have a chat about your options, why not have a chat with my team at Metropole, who over the last couple of months have seen more investors and home buyers come to us than we have for a long, long time. I guess these investors realise we're much more than just another buyer's agent. At Metropole, we safely help our clients create intergenerational wealth through property advice, and we're big enough to tip the scales in your favour, yet we're still small enough to care. So go to metropole.com.au and organise a complimentary chat with our team. Let's explore your options. By the way, we're not oblivious to the challenges our economy and our housing markets are going to be facing. We know where the landmines are. We've been around long enough. And what we are doing is protecting our clients from those challenges. In fact, even before we talk about your next property, we help you formulate a strategic plan that will help you safely maximise your upside and minimise your risks. So go to metropole.com.au and organise a complimentary wealth discovery chat with our team.
Now here's Michael's mindset message. Remember, a change in your thinking will lead to a change in your life.
In today's mindset moment, I'd like to share with you 6 things successful people only do once. They say there's a definition of insanity, and it's doing the same thing over and over again and expecting different results. If you make a big mistake, have a negative experience, and you return to the same situation hoping to get a different outcome, then you're doomed for failure, aren't you? So much of the drama that people go through in their careers, in their personal life, in their investing is avoidable if they listen to the signs the first time round. Now, not with all things, mind you. I mean, accidents happen, ill health happens. Of course, they can't avoid those. But so much else can be avoided. And yet we see people, sometimes people very close to us, in these emotional roundabouts and dead ends, and they're hoping for a different outcome. So let's look at 6 things successful people only ever do once because they learn not to do them again, and see where you fit in. The first thing is they only trust the wrong people once. I remember reading something from an American writer who once said, when somebody shows you who they are, believe them the first time. Now, there's a message in that. It's a great saying because it touches on what we know to be true. Sometimes we ignore our gut instinct about certain people, and it can get us into hot water. Pay attention to those who you work with, who work for you, and if they don't add anything to your life or your business, but in particular if they cause chaos and problems, don't excuse it. Don't excuse their behaviour. The second thing successful only do once and then they learn is mishandling money. Becoming good at handling money through saving, through investing, through getting involved in real estate, through projecting forward. It's a skill. It actually is. It can be learned, and that's why I spend time teaching you how to do it. And of course, we all make mistakes along the way, but smart people take money seriously, and they pay attention to it. Again, it doesn't mean they get everything right, but it does mean that whenever they're careless with it, they learn. They never say, oh, it doesn't matter. The third thing they only do once is to forget about the long-term reward. On the road to success, sometimes it's easy to forget, and occasionally you need to make some tough decisions and go without something in the short term for the benefit of the long term. Interestingly, this is a theme that comes up a lot, isn't it, as we have a chat, and it's the concept of delayed gratification. If you make decisions based on what you may think feels good in the moment, then it's very likely you're going to fail to take care of your long-term plans. Maybe you say yes to something just to keep the peace, but it's not the right path. Don't do that. It can really throw a spanner in the works. Another thing that successful people only do once, because they've learned, is to ignore their values. Look, all of us have got an innate sense of what's right and what's wrong. We've also got boundaries on what's acceptable behaviour, on what we will and what we won't agree to. Successful people don't ignore this internal value system. They know, maybe even from making this sort of mistake once or twice, they know the high personal price that's paid when you go against your own values. Something else successful people only do once, because they've learned, is they don't badmouth others. You may be in competition with somebody you dislike. You may even have a very good reason for disliking them. But successful people don't badmouth others in business, in life. They know it looks petty, and it's a sign of poor character. It also shows that rather than focusing on the work at hand, they're focusing on trashing others' reputation. Now, that's not a good look. And the other thing successful people only do once is ignore the detail. It's so important to check the detail and analyse the deal, ask questions, check the fine print. A healthy skepticism is just that, healthy and wise. If it's too good to be true, it probably is. So it's really important not to put your head in the sand. If you're not strong on detail, you better surround yourself with people who are. So the bottom line for today's mindset message is sometimes half the struggle of being successful is acting it. If you pay attention to your gut, to your intuition, if you don't badmouth others, if you're rigorous with detail, if you trust your instinct, if you surround yourself with the right people, you're going to be well on the way to success. Thank you for spending the last little while with me. I hope you got some benefit from this show. Hey, but before you move on to the next podcast you're hoping to listen to, please let me remind you that I have another show that I produce once a week with leading demographer Simon Kirstenmacher that we call Demographics Decoded, where we unveil the trends that are going to shape your future. This is a must-listen to podcast for anyone interested in property investment, business or entrepreneurship. So if you don't currently subscribe to Demographics Decoded, please stop for a second, subscribe on your favourite podcast app or on YouTube. Now, if you did enjoy today's show and you know somebody else who'd benefit, please tell them about the Michael Yardney podcast and Demographics Decoded. There's a share button on every podcast app. On Apple Podcasts, there are 3 little buttons at the top of the player. Or just talk to them, tell them about the Michael Yardney podcast. I hope you're going to be doing them a favour. You're definitely going to be doing me a favour in helping in my quest to make as many people as possible financially literate. Now, you can catch up with me in between these shows on social media, or you can join my private Facebook group. Just go to Facebook and look for the Property Update Facebook group. And I've got a special bonus for you to say thank you for subscribing. Just go to podcastbonus.com.au. There's a link in the show notes, podcastbonus.com.au, where I've got a bunch of ebooks and reports. That's my way of saying thank you to you for taking the time to listen. Oh, by the way, if you haven't listened to the many podcast episodes we've already got, we're well into our 600s of episodes now. You can always listen to the old episodes, which each have lessons about property investment, success and money. Once again, thanks for listening to today's show.
Thanks for listening to this episode of the Michael Yardney podcast, which was brought to you by Metropole, who help their clients grow, protect and pass on their wealth through strategic property and wealth advice. If you like what you heard and don't already subscribe, you'll find us on iTunes or on your favourite Android app as the Michael Yardney Podcast. Watch out for our next show, which comes to you twice a week, and you'll learn some new ideas about property investment, success and money in around 30 minutes. To get more of Michael's thoughts, go across to www.propertyupdate.com.au and sign up for his daily morning briefing, and you'll hear from not only Michael but a group of leading property success and money experts. And just a reminder that the information you heard in this show today is general educational advice and not specific investment advice, as we don't know your personal circumstances. If you're looking for specific advice, why not ask the team at Metropole to help you?